How should I be paying myself from my business?
So the whole point in honestly putting together S Corp is like you have that problem. You're making a little bit too much money. It's a good problem to have. But what you want to do is you have to actually pay yourself as an employee a reasonable salary. A reasonable salary compared to what you do in your business, right? It's different if you're the administrator for your business versus if you like the person that wear all the hats and you do everything. You know, the admin you can pay them $25K, whatever. That might be typical. You know, if you're doing everything, you have to pay yourself closer to what somebody to do everything would make. Typical rule is like you want to pay yourself at least like half of what you're making in net profit. So you know if you're making $200,000 a year, you want to have you want to be having at least $100K a year salary coming through, and then the rest of it is what you take as your cash distributions, and that's what you save on. The whole reason you do all this is to save on self-employment tax, right? Because when you're paying yourself out as a W-2 employee, you are paying FICA tax on that. You're paying 15.3% because you're both the employer and the employee. But when you take the cash distribution, you're only taking it's just federal tax or state tax, so it's ordinary income, and that saves you 15.3%. And then the other example I said earlier, if you were somebody who had $200,000 net income, doing that particular maneuver would save you $15,300 just right there.
Run that back, dog. Sit back, because I can't see your picture. What? So if you are both the owner and the employee, right? And you said the
S Corp, yeah.
So I'm paying myself. If I don't pay myself a certain amount, I'm going to be taxed a certain amount. Say that one more time slow.
Yeah. So like the IRS, in order for you to be an S Corp, like you have to pay yourself.
Right.
Like it's required. It's a reasonable salary. It's in the rules. So.
What do you mean by reasonable?
So I mean it depends, right? Like if you depends on what you do for your business. Like how much do you do inside of your business compared to that net income that you're pulling in, right? With like are you the manager? You know, are you the administrator? Do you just do you send off mail every now and then? You really step back, but it's really about how much you do in your business. You know, I know what you're saying, like how do they prove this, how do they know this, right? It's, you know, I mean that part's about you and your documentation, like they could look into your life and do all that stuff, but that's just in an event that something happens.
All right, so with that, right, trying to figure out how much to pay, how much not to pay, right? As you hire people in your business, you should be doing less. But there's another strategy to that. If I'm looking as Rashad, not my business, to qualify for a property, I want to show more income. So one year I might be 70,000 on a W-2 and just run it out. Why is that important? Because when it comes to qualifying for that grant, when it comes to qualifying for that home, when it comes to just qualifications, period, they're going to look at your income. And then they're also going to consider your DTI, your debt to income ratio. So when you're showing more money, make that a plan to, all right, in the next 2 years, I plan on doing X, Y, and Z. Now, when you reduce that money and you start to put other people into the business, hey, look, I don't plan on, I've already acquired these assets in my personal name. Anything else that I do, I'm probably going to do it in my business name. So Rashad don't need to show no money. Rashad broke.